Hello and good afternoon, everyone. Welcome to Citibank PLC's earnings disclosure web event of the fourth quarter of 2024. I am Saida Saima Hussain, your host for the event, welcoming you today. Thank you all very much for joining us. Today we have here amongst us the Honorable Managing Director and Chief Executive Officer of Citibank PLC, Mr. Mashoor Arifin, Additional Managing Director and Chief Financial Officer, Mr. Mohammad Mahbubur Rahman, Deputy Managing Director and Head of Wholesale Banking, Mr. Misbah Asif Siddiqui, Chief Risk Officer Mohammad Firoz Alam, and Deputy Managing Director and Head of Internal Control and Compliance, Mr. AKM Saifullah Kausar. At Citibank, we take great pride in engaging the investment community in our endeavors. While disclosing our performance and actions, we adhere to a strict code of full transparency and responsibility. Citibank has always measured its success not only in terms of its bottom line numbers, but also in terms of the goals it has set for itself in order to become the finest bank in Bangladesh. In our success is attributed to the continued growth of our business as well as the market's evolution to satisfy the increasingly sophisticated expectations of our respected clients in the areas of liquidity, service, reliability, and mobility. We have made it this far with the help of our community, team, and stockholders by tenaciously adhering to the motto of service and trust. In light of this, we have gathered here today to discuss the bank's current financial situation and its forward-looking strategies. We shall start with our AMD and CFO, Mr. Mohammad Mahbubur Rahman, presenting the financial performance, followed by our Managing Director and CEO, Mr. Mashoor Arifin, addressing all of you, and finally end with the question and answer session. Before we proceed, I'd like to inform you all that while scheduling the event, we attempted to choose the most fitting time slots so that we could accommodate most of the participants, both from local and foreign vicinities and time zones. I'd also like to add that we have opened our Q&A portal, which you can see at the bottom right corner of your screens. During our presentations, you can log in and place any relevant question in the window. We shall try our best to address them in our Q&A session depending on the time available for the program. Ladies and gentlemen, I now request our AMD and CFO, Mr. Mohammad Mahbubur Rahman, to start with the financial performance presentation. Over to you, sir.
Thank you, Saima. Good afternoon from Dhaka. It's a great pleasure for us to present the financial statements of 2024. 2024 was one of the best years in Citibank history. So that's why it's a great honor for me to present this result to you all. So we'll start some overview about the macroeconomic situation. We are showing you the GDP. We are projecting to end the financial year of 2024 with 5.3% GDP growth, though multilateral development organizations are projecting lower GDP growth. But on the other hand, they are also projecting higher GDP growth around 5 to 6% by 2026. So we have faced several headwinds in 2024 and also especially 2024, and we are hopeful that we'll be able to overcome all these challenges, and we'll start again. We'll have the higher growth trajectory again. And inflation was one of the concern for the economy, and you can see that the double-digit inflation has come down to single digit, and central bank is projecting to bring down the inflation to 7 to 8% by the end of middle of the 2025. Yeah. And here you can see that the export, import, and the remittance and foreign reserve position. The foreign reserve position is around $20 to $21 billion. And the good thing is that the government has actually settled all overdues, most of the overdues. So whatever the FX position or foreign reserve position you're seeing here, that will continue or expected to grow further as remittance is growing very satisfactorily in this year, around 23%. And at the middle of by middle of the year, it will reach around 27 billion, which will be the highest ever remittance in the country's history. Export is growing at the rate of 8%. Still, though global issues like tariff is actually has brought a little bit confusion about the growth of export, but still we are having around 5 to 10% export growth. And import is a little bit depressed because of the prices of dollar that we face in especially last year and the middle of the and beginning of this year, but gradually it's going to increase. And then the credit growth this is a challenging area, which has actually decreased to 6.8%, though the central bank's target to have around 9.8% credit growth. NPL is a challenge for the industry. Overall NPL ratio for the industry is around 70%, though the private commercial bank is having around 12% NPL ratio. Now I'm starting with now I'm showing the Citibank's result for 2024. As already I have told you that 2024 is a remarkable year for Citibank. We ended 2024 with 12% growth in loans and advance and reached 445.7 billion taka. But on the other hand, interest income has grown by around 33%, from 34 billion taka to 45 billion taka. And the increase of the main reason for this high growth interest income is that central bank has lifted the limit on interest rate. So that is a very good news for the banking industry. So that's why the interest yield on advance has grown from 7.95% to 9.78%. Increase is 183 bips. So this will we are expecting it to have actually to more growth in interest rate in coming days. Loans and advance, here you can see that most of the loans and advance is being held by wholesale banking division. Previously, we used to show the corporate bank and commercial bank separately, but recently we have merged these two segments for the better actually business. So wholesale banking as a whole, they contribute 60%, and rest of the 40% is contributed by retail, small and microfinance, medium segment, and car. We have been giving more focus on retail and small segment, and that's why it was more than around 70% 5 years back, and now it has reduced to wholesale banking contribution has reduced to 60%, and the focus in other areas is continuing. Though for last 2 years we have actually had a little bit slow growth in retail and microfinance to avoid the risk associated with the macroeconomic situation. But our long-term growth is to give more focus on retail and microfinance. And here we are showing that in 2024, we had the highest ever deposit growth, around 25% deposit growth we have experienced. 122 billion equivalent of deposit added in 2024, when the country experienced many challenges from political to macroeconomic situation. So, customers are placing huge confidence in Citibank. And here you can see that deposit in Citibank has grown by 31% in 2024 and reached 514 billion taka. But interest cost has grown by 79%, from 17.9 billion to 30%. You may ask that why actually we have increased the cost interest expense. Because of the liquidity situation, many banks actually increased their interest rate for the depositors. So to cope up with this situation, we also had to increase our deposit rate for term deposit. That's why term deposit cost has increased from 6.3% to 7.6%. But still, our deposit rate is lower than our competitors and all of the banks. So, but still, the impact of this hiking interest rate has impacted our cost of deposit, which has increased from 3.46% to 4.7%. 129 bips actually increased. Then here we are showing that our retail business segment, which is they are contributing most of the deposit with 65% contribution. It shows that Citibank's retail business is actually one of the very strongest business unit in our bank, and which has become a very strong pillar for the bank. And it shows the sustainability of our capacity to acquire more business, and especially the liability business from the market. Though the CASA ratio has reduced from 50% to 45%, but we have done it strategically, and we'll show you actually why we have actually acquired more term deposit, because there was a clear strategy behind it. But despite increase of cost of deposit, here you can see that in red line, the cost of deposit has increased from 3.5% to 4.8%, but our spread or net interest margin that is shown in green line has increased from 4.5% to 5%, because the yield on advance has increased from 8% to 9.8%. So that's why we actually took the opportunity to acquire more deposit at higher cost, because we knew that we'll be able to actually acquire business at higher rate, because central bank has lifted the limit on interest rate. At the same, on the other hand, there is also opportunity in treasury bill and bond, as government needs to raise fund from the banking sector. They have the rate for treasury bill and bond has increased quite significantly in 2024. So we took the opportunity to deploy those high cost deposit to treasury bill and bond. And here you can see the volume has increased from 78 billion to 138 billion, with around 76.8% growth. But income, you can see that it has grown by 244%. So our strategy to acquire deposit with the higher rate has actually given us a better result, because we could deploy our additional deposit to the loan, and as well as for the investment in treasury bill and bond. So export income, export and import business is one of the strengths of the Citibank. We cover more than 6% of the market share. And where the country's export growth is around 5 to 10%, import is almost without any growth. But our export growth has grown by 27.8%, from $2.5 billion to $3.2 billion. Import has increased from $2.6 billion to $3.6 billion with 38% growth. And commission fees and FX gain also increased from 5.6 billion taka to 6.5 billion taka with 16% growth. Credit card business, though 2024 was a very challenging year because of the macroeconomic and political situation, but despite this challenge, our credit card base has increased by 6% and reached around 708,000 card base. And credit card bill business has also grown by 8% from 43.9 billion taka to 47.5 billion taka. So income has also increased by 26% from 1.7 billion taka to 2.1 billion taka. Though in terms of size is not significant, but credit card is one of our core area. We still hold the largest market share, and it gives us a huge brand mileage. And also here I'm showing that we have launched two significant cards in the market. One is the Fast Vertical Visa card, and another is the very high-end first ever Amex Metal card for the high net worth customer. So it shows that Citibank is still actually thriving very strongly in the credit card business. So overall, revenue has grown from 27.6 billion taka to 30.5 billion taka with 43% growth. On consolidated basis, it's with 43% growth, because our subsidiaries are having different challenges. But in a solo basis, Citibank has significant revenue growth. So 40, against 43% revenue growth, our operating cost growth was 16.5%, from 14.6 billion taka to it increased to 17 billion taka. Our staff cost has increased by 14%, though we restructured our salary to motivate our talents, and also to help our human resources to adjust with the inflation in the market. We have restructured our salary. So our salary has increased by 14%. Our other operating cost has increased by 19.6%, because still we are investing heavily for the digitalization of the bank, and the benefit of this digitalization will definitely add more revenue in coming days. So this is the summary. Here we're showing that the operating profit, which has increased from 13.9 billion taka to 23.5 billion taka. So this again is the highest ever operating profit in the Citibank history, with 69% growth. Then provision 2024 is another challenge in the banking sector is the NPL. Overall NPL has increased in the market, and central bank also tightened the NPL regulation in the right direction. So we also appreciate that. So that's why our NPL ratio has increased a little bit, and volume-wise also it increased from 14.3 billion taka to 16.5 billion taka. And also our provision charge has increased from 2.8 billion taka to 68 billion taka. Also, we had to make a provision against our investment in capital market, and also our investment in subsidy, investment of subsidy in the capital market also caused us a higher provision. But we have taken the full provision against all the for all the declining value, decline in the price. So it has been covered. So provision cover ratio is still above 100%. But having said that, having this high level of provision charges, our net profit is even higher. That will show in the next slide. Here you can see actually the breakdown of the result of our subsidiaries along with Citibank. Citibank profit has increased from 6.1 billion taka to 10.8 billion taka, even after having very high provision. Our profit for subsidiaries, especially in capital market, has decreased from Citi Brokerage profit has decreased from 61 million taka to 58 million taka. Our merchant banks profit has decreased from 152 million to 90 billion taka. And money transfer, we have exchange house in Malaysia, which has the property level is almost even same, with a little bit decline. And we also have a finance company in Hong Kong. Their profitability also decreased because of the also some dollar and rate issues. But the thing is, the main challenge from the subsidiaries that has come from the capital market, for their investment, we had to incur 883 million taka of provision in our consolidated accounts. So with this additional provision, our consolidated profit actually still crossed for the first time 10 billion taka milestone. So last year, 2023's profit after tax was 6.3 billion taka, which has increased to 10.1 billion taka because of the higher operating profit and higher revenue. So again, just I'm reiterating that this is highest ever profit for the Citibank as a group. So here you can see the last few slides where we are showing the return on equity. We are showing the return on equity on a solo basis as well as consolidated basis. On a solo basis, you will see that our return on equity has increased from 17.6% to 26.1%. But based on consolidated, our return has increased to 23.9% because we had to make actually provision for subsidiaries. But if capital market actually come back to a normal situation, then you can actually estimate that how much the return on equity will be on a consolidated basis, because then we'll add actually more profit from a subsidiary that we couldn't do in last year. Also, return on equity, same. It has increased from 1.2 to 1.7, but on a consolidated basis, it is 1.6. We have already declared a dividend, and it will be approved in the next AGM. This for 2024, we have declared 12.5% stock dividend and 12.5% cash dividend. The rate is overall 25%. In 2023, also the overall rate was 25%. Then earning per share, again, it increased to 8.06 for on a solo basis. So bank earned actually 8.06 earning per share, which on a consolidated basis, it is 7.5. But again, if we have a proper functioning good capital market, it's very easy to say that earning per share on a consolidated basis will be higher than the solo basis. So the NAV is also around 35 taka, which was around 28 taka in 2023. Capital adequacy ratio on a solo basis is around 16%. On a consolidated basis is 15.3%. So it is very strong. We are holding very strong capital base. This will ensure the growth in coming days. These are the few actually regulation that has a significant impact in the banking industry, especially the change in loan classification regulation. And also we are going to have IFRS implementation of IFRS 9 by 2027. So Central Bank has given a roadmap. So this will give a better governance for the bank in coming days. So now actually we have few slides for a very important area, that is the sustainable finance. So Citibank is very much actually strategic. This is one of the very strategic intention of the bank to become a very strong in sustainable financing area. So I'd like to request our CRO, Mr. Firoz, to add to explain these few slides about the sustainability finance.
Thank you,
So,
Maupai.
Firoz bhai.
Thank you, Maupai. Good afternoon. As you know, sustainability is an important part of our core value and business practice. We integrate environmental and social consideration across both our lending portfolio as well as our internal operation. And let's see our key achievement in sustainable finance. We see that last year our sustainable finance disbursement growth was 167%. In amount, it was about 400 billion US dollar total, in taka and total disbursement. And previously it was 91 billion. And against which it was 400 billion against our total requirement of 91 billion taka. And similarly, in green finance disbursement growth was 200%. And in taka, it was 33 billion against the requirement of 5 billion. In percentage, if we consider that our achievement was 34% of total term loan disbursement against Bangladesh Bank target of 5%. We are also working on green liability product, which is the new in the industry. Last year, we launched innovative green savings account in February 24. And the key features of this savings account was the total, this deposit amount will be financed in green and sustainable project. At the same time, for every account, we plant 1 tree. You also know Citibank started its sustainability journey more than a decade ago. In addition to financing green and sustainable initiatives, we are very much focused on our internal ESG practice. Key in-house initiatives including Citibank is the first bank in Bangladesh to join in the Net Zero Banking Alliance in United Nations. Also, Citibank takes some initiatives to reduce their carbon emission. As part of that, we installed solar panel in our 38 branches and sub-branches. Also, we have 33 solar powered RATM and 19 solar powered as an outlet. Also, if we see some key highlights about the green financing, we disbursed last year 2 billion in the renewable energy project for financing of the 100 megawatt of solar power plant and 60 megawatt for the wind power plant. And also we financed 9 billion in energy resource and efficiency machineries and 6 billion in LEED green certified client. And also we take some initiatives for financing in the waste management and circular economy. In last year, too, we financed in couple of project in waste management under our small business and medium business. Next.
So next slide.
Our effort in sustainability have not gone unnoticed, and our work has been recognized in both nationally and internationally. And key achievement include the Citibank was the top sustainable bank for the last 4 years in a row by Bangladesh Bank. And also we Citibank recognized as climate focused bank by USAID, Green Tech Foundation, and Dhaka University. Citibank also ranked top 10 sustainable bank by Sustainable Magazine of UK, and also ranked 7 best bank in Asia Pacific by the Bankers Magazine for sustainable revenue ratio. To learn our sustainable initiative and progress, you can scan our QR code to access the GRI Standard Sustainability Report of 2023. And we are also in process of preparing the Sustainability Report for 2024. That will be also uploaded in our website. That's all related to the sustainability. Thank you.
Okay, thank you, Firoz. And this is kind of a last slide from me. Not only just business or sustainability financing, we are our key asset for the bank is the employee, and for that actually we have launched many programs, and among them is we have launched employee value proposition, and which will create a future banker and future leader for the bank, who will ensure the real sustainability of the bank. So I'll not actually explain line by line, but this is also unique initiative in the banking industry, which will definitely give a very good result in future. So and then there are some, we are sharing some picture about various rewards that we have received in 2024. I'm not going into detail. So with that, I'd like to actually end my presentation. So I'd like to request Saima to conduct the rest of the program. Thank you.
Thank you very much, sir, for your enlightening financial performance presentation. Ladies and gentlemen, it is my great pleasure to call upon Mr. Masroor Arifin, Managing Director and CEO of Citibank PLC, to speak about the views and forward-looking strategies of the bank. Thank you.
Thank you, Saima, and thank you, Mahbub, our CFO. Thank you, Firoz, our Chief Risk Officer. Yes, we had a very good year. I believe the best year ever. That result is very clearly have been presented by Mahbub. I'm really proud. I'm thankful to you for your support. If you asked me to summarize why I said that it has been the best year, the revenue, basically income, grew last year by 43%, whereas expenses grew by 17%, 16.5%, meaning we earned much more than we spent. So whole industry also came to know that we entered one of those as one of those 4 banks, first time in our history as a local private commercial bank, conventional bank. First time we entered in the operating profit area, we entered $200 million, which is 2,000 crore taka. Roughly, I'm calculating 100 taka, $1, keeping that in mind. We entered that territory. That is a very much proud moment for us. It's a new area for a few of those banks, Dutch Bangla, Citi, BRAC, and Pubali. Last year we entered that. We ended the year with an operating profit of 2,351 crore, which is around $235 million, $230 million. So operating profit automatically grew by around 70%. But I thank all the business units who took care of the income. Income came from interest income was good. Fee commission income, as Mahbub mentioned, there was a good amount of fee commission income. There was huge growth around, $1.3 billion worth of BDT growth in low-cost deposit last year. So that was also phenomenal that when at a time when people were shying away from Bangladeshi banks, Citibank's deposit net grew by around 1.3 billion USD equivalent BDT. So, but with that, it's not that the cost of deposit we lost control over the cost of deposit. Cost of deposit grew only 1.2%, but at the same time our yield on advance also grew, meaning we perfectly gave a balance to the extra cost that came in the form of paying to the depositors. So our overall spread was maintained at 5% last year. Right, Mabu? It was 5%.
Yeah, absolutely.
Yeah. Yield on advance was 9.8 and cost of deposit was kept below 5 at 4.8. So overall, we earned 5% interest income. At the same time, investment income was also good, but it's not that Citibank earned only from investing into government treasury bill and bonds. Though that was the case with many banks in the country. But if you seriously analyze our profit and loss account, you will see that only 19% of banks' total income came from treasury bill bond investments. 76% came from core banking activities, which basically means interest income, fees income, and commission income from trade business. So overall, with that kind of an operating income, first time Bangladesh saw 4 banks entering $200 million territory. From that, it was always a hope for us that after taking adequate provision against the stressed book and bad debts, we will be able to maintain a profit after tax of over 1,000 crore BDT, which is roughly $100 million US. And we successfully did that. And that showed a profit after tax growth of 58.9%. So big thank you to all of you, the investors, the well-wishers of Citibanks, to the regulators, the developers of our, to the developers whose softwares we use, to our other stakeholders, our subsidiaries, and everyone. 58.9% growth in after-tax profit, which took us on a consolidated basis to 1,014 crore. And on a solo basis, actually, the bank earned much more than that. 1,085 crore we earned on solo basis. But due to the certain provisions that had to be taken, due to certain losses in market exposures in Citi Brokerage and Citi Capital, we lost 71 crore or $7 million US worth of profit after tax. But that's okay. We are still only 2 banks above 1,000 crore mark in terms of profit after tax. BRAC Bank and Citibank, only 2 banks. And these 2 banks, the first 2 banks in Bangladesh's history as conventional 2 banks which have crossed 1,000 crore mark in profit after tax, like the way 4 of us crossed 2,000 crore mark in the operating profit line, and 2 from them could not make it because of the provision requirement mainly. But Citi and BRAC did it. I'm very happy. I also want many other good banks around us, because then it's an overall better banking environment. So I want more of the BRAC Bank kind of banks, more of the Dutch Bangla, Pubali kind of banks around us, the top players in the market. Because we are, end of the day, ultimately, it's not about only doing good ourselves. It's also, about, building an economy, building a banking industry where, it is safe to do different activities, money market plus many other activities with other banks. So I do look forward to a better banking industry, and that is in the making now under the leadership of Dr. Ahsan H. Mansoor, ex-IMF official, who is now the governor of the central bank. Lot of reforms are underway. Including governance side reforms, and new banking company acts are coming very soon. Plus also the resolution ordinance is coming which is basically how do we tackle with those 12, 13 banks which are all now facing huge amount of write-downs because of the malpractices that went rampantly in those banks. You all know about those, and there has been a regime change after that. So now reforms are very much in the agenda. We are part of that. We are a big bank with a lot of international exposure and also a lot of TACA exposures, huge. So, we need your blessings. I would like to say you are the mainly here who are listening to me are mainly our shareholders and our investors. So ROE wise, you basically carry about, what is the return on the equity, on shareholders' equity, and this is where we have actually made a history in Bangladesh. Last year, on a solo basis, if you look at the last quarter result, meaning last year result, we have offered a solo basis equity ROE of 26.1%. And on a consolidated basis with the losses of 71 crore that I took due to the loss of 2 subsidiaries, on that basis also, we have offered a 23.9% return on equity. And no bank meaning no bank, no bank could even come near us in terms of ROE. So meaning, it's a very, 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 very good place. We are happy that we could create happy shareholders. And I am happy that, after the declaration of dividends, both in the form of cash and stock, we have very solid capital adequacy plan. I'm happy that, we will still be in the range of 15% capital adequacy, even after giving these, dividends, paying out this, because first quarter has not gone too well. And at the same time, not too bad either, because industry is going through a real turbulent phase. A real turmoil time is going on. There is liquidity pressure, and there is also NPL related kind of new developments, because which is some of it is connected to regime change and some of it is connected to other external factors. So that's the reason I cannot say that first quarter has gone too well. Neither can I say that it has gone too bad. But I can say that overall, another 8 months left. Citi with a big income generating machine we have already built, so we cannot be doing bad. So it is going to be a good year again, with a special focus on 2 of the digital projects. One we call Great Wall, which will ultimately see Citibank launching digital bank, and one is Project K2, which is we are coming up with an AI powered machine learning and big data analytics powered new Citi Touch. By the end of this year, both will be happening. At the same time, we are geographically progressing to catch or to lure into us the businesses of certain big economies of the country, of the world. Our initial focus is Japan, China, Japan, Middle East. These are our focus areas. China especially, geopolitically also Bangladesh is moving towards that. They are a big partner of ours. So this is also another strategic intent. Another strategic intent is to become the bank for bank insurance products for the entire country's population. So bank assurance is also another big focus of ours. And in this year, the 5th biggest focus is opening of a small and medium segment letter of credits, LCs, to support the economy, to support the small traders, and which also will reinforce our commitment to really grow in the retail and small and credit card sector. Recently, we have just launched a metal American Express card for the upper echelon of the society, but on the credit card side also we'll be going into that segment, low income group. And at the same time, just looking into the way bad debt scenario is unfolding, our growth will be there in the corporate commercial medium segment, but it will be only with very good customers. I welcome our new head of wholesale banking, Misbah Asif Siddiqui, who I will request to raise hand. He is there very much. He is new head of wholesale banking of the bank, corporate bank, and also corporate deposit side, which we call cash management. Now they have institutional liability, a new name, so these two areas and offshore banking units are all now comes under Asif, who was the erstwhile CRO of this institution. He's the deputy managing director. So the focus in those big ticket lendings will be there if those are really good customers, globally reputed customers, or local top customers with clean record and all that. And we are also waiting the political stability to come, which is provisionally there now, and this is okay. We are actually happy that banking sector is much more transparent and much more discipline and governance has come to the sector, which gives us the courage to do banking more courageously. So that's where I will stop with this, saying that two digital projects are going on. One China-based focus related strategy is unfolding. And growth areas of lending have been clearly identified: retail, card, and small. And I have also said that the trade will be a big focus. We're aiming for a double-digit growth in the trade business, export-import together. Last year it was 7.3 billion. This year we hope to take it to 10 billion. But it may not be easy because the dollar. Mahbub explained that export is stable, remittance has seen all-time high growth and all that. But still, there is still pressure on the dollar because interbank market is still not really, active. So still, I can end it with a note of really high hope. This bank is a bank which produced first time in our history 6% return on equity, and you look at the return on asset also, NPL ratio also. We are going towards reaching the global class level in all areas of banking that we call. Thank you all. Thank you.
Thank you, sir, for your eloquent words. Ladies and gentlemen, we have now reached our Q&A session. The first question is, what is Citibank's strategy for reducing the cost of fund?
The strategy is to focus, be more popular, to be more an address for the CASA, current and savings account holders. So this is also tied to the two digital projects we are running. The answer lies there.
The next question is, do you see a rise in NPL in the coming days, considering the eco-political situation and new loan classification rolled out?
Yeah, the new loan classification has already contributed some growth in NPL. So that is one element why NPLs grew across the industry. Another is that, a lot of businesses have certain connection with the last regime. There's another reason. Another reason is that overall economic slowdown, I wouldn't say, but of course slowdown. If you look at the GDP projections and all, Bangladesh is going through a reform phase. So in this phase, before it is like the plane is on the runway taxiing. So before it takes off, there will be this period of little bit of, consolidation and also, slowdown in sales in certain areas. Plus, dollar crisis has not yet evaporated. As I said, that interbank market is not yet active. All of these factors together, in addition to the new, CL policy coming into play, these are also reasons why NPLs will see a little bit of growth. But we need to manage. Central bank is helping us very much by forming a task force, where commercial bank, central bank, and business people are sitting together in sorting out the pressure on loan repayment.
Thank you, sir. Moving on to the last question of this session. We know that there is a gas crisis as a result we know that there is a gas crisis in the textile industry in a challenging time. How much is the Citibank's loan position in the textile sector?
Asif.
Yeah, actually, this gas is most not with the entire the textile and the apparel or RMG sector that we say. It depends on the the dyeing and the spinning side. So that portion. So we all together garments, which we also call apparel, and the spinning textile all together, we have 22% of our asset portfolio exposure. Out of that, actually, less than half or around 7 to 8% is the spinning and the textile. Most of them actually is not hit heavily by this gas crisis because alternative solution they have found. So they managed to continue their production. So that actually also reflected in our asset quality. Repayments are still good. Our customer base is one of the key success factors of we doing well in 2024, keeping the NPL ratio below 4%, despite having so many economic, I would not say crisis, it's rather a crunch, and also the pressure from the dollar pressure, flood issues in last year. All together, actually, we could do well because the customer we have selected is in the best of the class that has been built in decades. So it's a success from the cumulative prudent decision that the management and the team has been done. I'm proud of the team that we have with our and the customer base that we have.
Thank you, sir. Ladies and gentlemen, we have reached the end of today's earnings disclosure event. Thank you all for your participation and patience. Before concluding, let me inform you that the recorded version of the entire event will be made available in the same web link as per the live program very shortly. Those of you missed the live event or want to skim through it at a later time will find the whole event documented there. The financial presentation will also be available in Citibank's website under the Investor Relations section. We appreciate your participation and patience. Thank you again for your interest in Citibank PLC. Goodbye, stay safe and stay well. Thank you.
Thank you. Thanks, Eva. Thank you, everyone.
Thank you.
Thank-
So
Thank you.
Thank you. Thank you.